I just got some crazy news. My mortgage just went from $4,500 to $6,050, and it'll be effective March the 1st.
Whoa. I was already gasping at the original mortgage price being $4,500, but going to $6,000? I can just tell by her face she mad. Goodness.
I have never considered a bank, but I got this black hat and this black mask because, I mean, at this point, like, what the fuck do you expect? I'm trying to keep my kids in decent schools.
Now, what she's experiencing in 2025, a lot of homeowners are going through the same thing. And I'm not talking about the ones that got arms. That's a whole nother story that we might actually get into later in this video. But the people who got fixed rates and just so happened their property taxes went up or their home insurance went up ends up being the reason why their mortgage went up.
My mortgage went up $1,000 and I am not okay. So let me tell you guys,
Man,
for the longest time, people be screaming from the hilltop, home ownership is not it. Like, don't rush, don't rush. And I will just be like, I don't understand it because I'm literally chilling. Like, cheaper than rent.
yeah, until
I was bamboozled. Let me tell y'all what they do not tell y'all about real estate. So they do an analysis every year from, at least with the mortgage that I got, right? And so they did an analysis and basically my mortgage increased by $1,000. And I asked them why. And they were like, something about my house is a new build. And so I guess they charged me for the taxes when it was just the land for 2 years. Then after year 2, they add the taxes with the house actually on it. And they were like, yeah, your builder is supposed to tell you. They didn't.
And we talked about this in the last video. And the reason why they may not have told a lot of people this information, especially with the new builds, this is likely where you will see it, is with the new builds. When you're looking to get a new build, first off, I hope that if anyone is looking for a new build, you have a real estate agent. Let's just start there. Whatever piece of land that you are looking to build the house on, they have not assessed how much it will be once they put the house on top, and they might even develop the area very well. Let me just put this in perspective for you. Let's just say the land itself is $60,000 and you would end up paying quote unquote $60,000 for the tax on the land only. But once your house has been there around that second year mark, you may see it go up to an amount that you weren't even expecting. That's because you were in a new community and your house had not yet been assessed. So they could say, hey, this is the amount of tax that you're really going to end up paying because this is the property value. It's assessed on the value of the home, not just the land. And that is how a lot of people get got. So just think about this. You walk into a new build and you're like, hey, I'm interested in building a home. You sit down there with your realtor, hopefully, and the builder, and they usually have somebody there that's going to be showing you the model homes and all that. And then eventually they're going to get to the step where they want to know how much can you afford. And then after you've decided you like the way the model home looks, they're going to say, hey, we need to talk some numbers. And they're going to give you some numbers. And one of the first numbers they're going to give you is how much the house is looking like it's probably going to go for. Then you're also probably going to get something that says how much the interest is, because that's going to have a lot to do with where we are currently in society as far as home interest rates. They're going to talk to you about how much property taxes you will have to pay on that and any other viable information. And that's the number they're going to say, hey, this is how much your mortgage is going to be monthly. What they may not tell you is this number can change. But just think about this. Even if they got it as close as they can get it, as far as to what they think your real monthly mortgage is going to be for that home, you also have to consider the fact that your property taxes may later go up because you might be living in a community where they're building up the whole area and now everybody wants to move and flock to that city within the next 3 years, and now your property taxes done went up. Or you could even just be in an area where your home insurances went up because maybe you have a lot of natural disasters, hurricanes or things like that, floods. And perhaps the insurance company is saying, hey, in this area, we got a lot of stuff going on, so we need to bump the people who live in this area up. Well, unless you don't want any homeowners insurance, you're going to have to pay for that too. And we discussed this in the last video I did, but I wanted to bring this up again because there was a lot of comments in that video where people were saying, hey, who said for y'all to get ARMs? Now, I want to talk about ARMs real quick. An ARM is an adjustable rate mortgage, unlike fixed rate mortgages that have interest rates that remain the same for the life of the loan. The interest rate on an ARM can change periodically. And what we end up seeing happening there is sometimes their interest rate might be like 4% and maybe it might be 6%. And it's kind of uncertain of what that interest rate will be. Those were just examples. it can get pretty bad because I didn't say the interest rates are going to stay on the lower end, which is why you can see there might be a lot of uncertainty when it comes to an ARM. Now, I'm not going to sit up here and act like everybody knows what an ARM is and what a fixed interest rate is and knows about escrow, because before I was a homeowner, I didn't know nothing about that either, which is why I think it's very important to discuss this sort of stuff, because I know a lot of people do wish to own homes.
And so I asked them, can I sell the house? And they were like, there's no equity in it. I see me smiling, but come next month, I'm literally going to be in tears because $1,000 extra a month, I legit want to move back home and live with my parents.
Oh,
But I don't have that option. I'm sick. I'm sick. Honestly, don't buy a house if you're single. Buy a house when there's two incomes coming in.
Never seen this video before, but that is very interesting that she is single with $1,000 mortgage. Now I understand why she might be feeling the way she's feeling. Granted, we don't know how much money she makes. She might be able to do it on her own perfectly fine, but it doesn't sound like this is something she wants to do. A $1,000 increase when you're married is insane, but a $1,000 increase when you're single is even crazier. But I also have to agree with her point that I think it's a lot better to have two incomes when you're trying to pay a mortgage than one, because what if somebody gets laid off? What if somebody gets sick or injured? It would be pretty nice to have somebody that you can depend on with another income to make sure that if you do get hit with $1,000 increase on your mortgage, when life be lifing, because life happens at the worst time, that you're going to be okay still. Now, if you can do it on your own, that's perfectly fine. But this is just one of the expenses that come with home ownership that a lot of people just aren't aware of and probably don't even think they have to consider, because when you get that first mortgage payment, you think, oh, it's going to be like this for 20 years. And it may not be. It's likely not going to be. But I still wish her well, and I hope she's able to figure out her living situation, because, man, $1,000 extra, that would hurt a lot of people.
My mortgage went from being $1,500 to over $4,200, and that's because I made the decision to move from Michigan to California to have better weather.
I know you lying. Did I just hear that correctly? She said for better weather? Hold up. I thought she was going to say for a job, for better weather. Let me hear the rest.
And it's just so crazy to me because I'm not even in a house in California. I'm only in a condo. I did some calculations. If I was to buy a single family house that's even similar, remotely similar to what my house in Michigan was, then my monthly mortgage would be over $10,000. And to get a house that's kind of small, 3 bedrooms, maybe $1,500, my monthly mortgage would be over $7,000 in California. It's just
That's why the people in California be having roommates. That's ridiculous. And correct me if I'm wrong, but isn't California one of those areas that's not really lenient as far as home ownership goes for the taxes and stuff? And the insurance rates be through the roof in California.
wild to think how much more housing costs here, because in Michigan, for $250,000, you can get yourself a really decent house. Here, you can't even get something at a trailer park for that much in Southern California.
And I'm upset because here I was waiting to hear why this was a good decision. I was waiting to hear what she was about to do about that. I was waiting to hear her say, I'm moving back to Michigan, and crickets. Girl, you really finna stay in Southern California knowing that this is what you up against? I don't even know what to say because she's asking for it. She said for the weather. I was like, no, she's going to be like, I got a tech job, or I do blah, blah, blah. I do some cybersecurity or something. So I don't know. I thought she was at least going to say you was a boss babe or something, but maybe I'm wrong. Maybe she's not even tripping about this because maybe she got it. She might actually be a boss babe. She might got her stuff together. And don't get me wrong, I love California weather, but for that price, you can forget it. I thought about moving to San Diego till I seen the prices on them homes, and I said, hell no. California, you out of my league.
The reason why my mortgage went up over $1,000 is because homeowners insurance in Florida has gone through the roof. You see, Governor DeSantis has created this huge distraction talking about Disney and drag shows and banning CRT and banning books. But what we are failing to address is the big homeowners insurance crisis that we're having in Florida. One reason why homeowners insurance has gone up in Florida is because FEMA has remapped the flood zone. My house, which previously was not in a flood zone, is now in a flood zone, forcing us to have flood insurance. With that being said, Governor DeSantis signed into legislation that Citizens Insurance, which is state-backed and also the largest provider in the state of Florida, will be forcing homeowners to have flood insurance whether they are in a flood zone or not within the next 5 years. That same bill will also require policyholders of Citizens Property Insurance to switch to a private insurance company if the renewal offer was less than 20% higher. The only problem is all private insurance companies are leaving the state of Florida. Another reason why homeowners insurance is going through the roof is because Florida is rampant with fraudulent claims and litigation. If you see a blue tarp on a home in Florida, it's either the homeowner's trying to scam the insurance company's trying to scam the homeowner, or the contractor's trying to scam both. Furthermore, the Florida Supreme Court ruled that attorneys can charge more for billable hours in the state of Florida when it used to be capped at like 25%. Over a 10-year span, there was $51 billion in claims for Florida insurers. 71% of that went to attorneys and public adjusters, while only 8% went to claimants themselves. And from 1851 to 2018, 41% of the 292 hurricanes that hit the United States hit Florida. And 37 of those 120 hurricanes that hit Florida were rated Category 3 or higher. There's been at least 14 private insurance companies that have liquidated and left Florida. And in Florida, the average homeowner's insurance policy is $4,200 a year, while the national average is $2,700. So while our governor is fighting this make-believe culture war, many of us are being priced out of our homes.
Florida. And what's very interesting about this is in 2023, that video was posted. And a lot of things have happened in the state of Florida as far as home insurance policies and a lot of people being pushed out of their homes. And exactly what he was saying is what we ended up seeing happen. The insurance companies pulling out of Florida in mass droves. And for those of you who live in Florida that have mortgages, can you comment down below? I would love to know, what is the state of your home insurance policies? Like, do y'all have home insurance? Because the way that they just pulled out of Florida was crazy. And of course, you got to be aware of the natural disasters and things of that sort that are frequent in areas like Florida. But I just am curious to know, how are the people doing there? And we also have to consider, this is a good example of why insurance policies can go through the roof, thus making the mortgage payment unaffordable. Thus, a lot of people end up having to sell their homes for pennies on the dollar. And I know nowhere in the world is extremely safe from any natural disasters, but this does open up the conversation and some food for thought about where you want to buy a home and is that the best location? Because if things like this happen in Florida, you just never know what's next. And even answering that question might change if you even want to get a home in that location or not.
First thing first, y'all want to know where I live. I live in Washington, D.C. I'm in D.C., not in the DMV surrounding area. I am in D.C.
Look, what's crazy is her mortgage went from $3,400 to $5,300. Lord have mercy.
And the big thing is she has an ARM. She has an ARM. She has an ARM. An ARM. I do not have an adjustable rate mortgage. I don't have an ARM. I have a fixed mortgage. My rate is fixed, right?
And that goes back to what we were talking about earlier when I gave you all the definition of the ARM. That's because a lot of people assume that because your mortgage is fluctuating, it's because you got an ARM. And sadly, a lot of people like to use that as an insult to say like, oh, you shouldn't have got an ARM. You should have known better, blah, blah. She didn't get an ARM. And a lot of these people didn't get an ARM. Sometimes your insurance just went up. Sometimes your property taxes went up. And while we're back on that topic, a lot of things could affect your property taxes, like how you vote in your local elections can affect your property taxes. That's why it's important to be paying attention to what is going on, because a lot of people don't notice until it's at their doorstep, quite literally. No pun intended. I want to give a little credit to the older population because they be on it. They be like, oh, they want to up our property taxes to go build this over there. They don't be for it because they be on fixed incomes. They be on top of it. And it's the stuff like that that you aren't really paying attention to, what they're doing and what they're trying to do. The money got to come from somewhere, y'all. So you got to pay attention to what's going on in your county and how you're voting and things of that sort, because it does affect your home prices sometimes. Sometimes it does affect your assets.
The second thing is you should sell and move out. And I'm not going to sell and move out, but I kind of have an idea of what's happening because this happened on Friday, y'all. I made some phone calls on Friday, but in a nutshell, basically, I think they classified my property as a vacant property and not a residential property. But again, on Tuesday, when I call Department of Buildings and I make some extra phone calls, I'll find out exactly what's going on. Buy your house. I've been to the closing table several times. I know about Escrow. I know how it works. People are stitching saying, oh, this is a big mistake that that first-time home buyers make, I kind of like an escrow, y'all. I kind of like just bundling everything together and paying it out.
So what I found interesting about what she just said was she likes escrow. And the reason I'm saying that is because a lot of people can't stand escrow. They're like, no, I want to pay my home insurance myself. I don't need you to do it. I don't need you to take my money and pay my home insurance. And they're like, I don't need you to pay my tax bill for my home at the end of the year either. Because remember, escrow is comprised of two things: property tax and homeowners insurance. You can choose to do that on your own, and I'm not giving anybody advice. Do what you think is best. But a lot of people think they truly have it under control and they don't like dealing with the escrow and all of that extra stuff. And then there's people like this that are like, hey, I don't mind them lumping it all together and just letting me know what's what at the end of the year or the beginning of the year. And this conversation actually leads perfectly into the next video.
I knew what I knew now, and I could go back in time to when I first bought my house. I would do everything I could to not have an escrow account. Okay. That is the biggest pain in my ass every year. If you don't know, an escrow account is kind of like, the only way I can describe it is like a bank account that's connected to your mortgage. So when I pay my mortgage every month, I'm paying the interest and the principal on my home, as well as the estimated taxes and my homeowner's insurance. And then every year, just to protect the mortgage company, they take that money I've paid them all year long, and then they pay my insurance premium and my taxes on my behalf. However, after the first year being in my house, I learned you got to double check this stuff, okay?
Yeah.
Because every year, out of the 9 years I have owned this home, I have to call and make sure my homeowner's insurance, like premium for the year, has been paid, okay? I just got a letter in the mail saying, like, oh, your policy is going to renew March 1st. We ain't got your money yet. Even though my homeowner's or my mortgage, my escrow account says it was paid on February 10th. They're like, yeah, girl, we ain't got your money. You need to call them and figure that out. Whereas if I just had my own bank account and I set this money aside every month, like a sinking fund, I know it's paid. I know it's there. Instead of spending it out on the phone, trying to figure out where my money is.
The part that I felt deep in my soul was when she said, I don't want to be on the phone with them for hours. I know what she meant. You could be on the phone with the people for an hour, going back and forth. Oh my gosh. Every year. Now, I want to quickly talk about a few of the comments that stood out under the last video so we can get a better understanding and learn from each other's experiences, right? So this comment here says, it's not the lender's job to educate anyone on how a mortgage works. People need to do their research before buying a home. We are all adults with a ton of information at our fingertips. People are just lazy and then want to blame someone else for their bad decisions of not researching before a huge purchase. So all I did was put this information in Google, and I'm not saying this to be mean. I'm saying this to educate people because that's the whole point of these videos. It's not to make anybody feel bad for not knowing things, because to be honest, most of us don't know anything until either somebody teaches us or we either go out and look for the information, right? Or we end up in the situation ourselves and then we're able to help other people because we've experienced it. But a quick Google search pulls up what a mortgage loan officer job description is. We haven't even clicked on anything yet, and off top we can see it says from LinkedIn to help qualified borrowers successfully obtain mortgages, educate customers on mortgage rules and regulations, interest rates, and the application process. And if you also see it says advise. I haven't even clicked it yet. Lending Tree says a mortgage loan officer helps customers apply for a home loan and offers or negotiates the term of a home loan for a fee. Indeed says lenders or mortgage lenders are professional or licensed institutions that provide a financial assistance to clients. And for those of y'all who like AI like I do, it says here a mortgage lender is a financial institution that provides funds for home purchases or refinancing, assessing the borrower's creditworthiness and financial stability to determine loan eligibility and terms. And the reason why I'm saying that is because that to me sounds like that is their job. Their job is to educate. Their job is to inform you on what your loan would look like. Guess who has information about the taxes on your home? Guess who has information on what the interest rate will be for your home? Guess who the person who is drawing up all the paperwork is? Guess who knows how much you and your family are bringing in? There's a whole extensive process done with the loan originator. So in all fairness and with all due respect, I would say it is their job, alongside the job of the realtor, to make sure that the person buying the home is getting the best service possible. But I do agree, we do have a lot of this information at our fingertips. The real question is, how do you know what to look for when you've never been a first-time home buyer? When you don't know any of this lingo, that you don't even know that you need to search to figure out what an ARM is. You ain't even never heard the term escrow before. To know that the term escrow really is comprised of two different things. I just think we have to be honest about how people really learn things and where they learn it from. You learn it from somebody typically teaching you it. You didn't just wake up knowing what escrow is. None of us did, and that's okay. And it's perfectly fine to say you don't know. It's perfectly fine to not know. With that being said, I do think it's okay to hold people accountable to doing their job when it's to help you out, which is why I read the job description. Your realtor is there for your best interest, to look out for you. They are not there to look out for the builder. They are not there to look out for the lender. They work for you. And I say that because a lot of people don't know that. But y'all, let me know what you think about all this down below. What part of this video was the craziest? And I hope that this was very informative and helpful to you. Do you want to buy a home, or has this video made you rethink the home buying process? Remember, this video isn't to deter anyone from home ownership, just to make you aware of what is out there when you are doing the process. But we have to start making better decisions today in order to have a better future.